Hello, friends. Welcome to Nirmal Bang. I'm Piyush Jain, and today we are focusing on a sector which is in the limelight for many reasons: banking sector, financing sector. We know the fourth quarter has been really strong for the sector. We have been seeing earnings across housing finance, across banks, across vehicle finance, and whatever theme you want to pick. But the result has been one that the growth has been strong. It has been looking healthy for almost every stock, every sort of company in the listed space here. But aviation is another space which actually is grabbing headlines, and it also implies there's a credit exposure we need to talk about. And we also basically would be talking about what sort of development happening in the bond market, and while the FY20 is closed, how FY2024 perhaps you could be looking from a credit growth perspective. Lot of questions, and for answering such questions, we needed an industry veteran with us. And for that, now let me welcome Mr. Rajnish Kumar, the former chairman of State Bank of India. Sir, welcome to the show.
Thank you. Thank you so much.
Sir, you've been at the helm of the affairs of the largest bank in India, and these trade cycles, the affairs with any odd company, it has been an affair like over your long journey. Uh, so I will first start with the aviation space here. This is not the first aviation company which has gone under. We have seen in the past Jet Airways, Kingfisher, but let's talk about now. As per what the insolvency basically has been filed into the court, we actually have heard an exposure of about 11,000 crores plus from Go First, which combines financial creditors and operational creditors. Largely, I was taking a look at an exposure, and what actually I was reading across was we had an exposure of Central Bank of India around 1,300 crores. The rest is guaranteed by the government of India, so I'm not counting that. Bank of Baroda around 1,400 crores. Axis Bank very small, 30 crores. IDB Bank around 60 crores. And there is another Deutsche Bank, 1,300 crores, which I suppose it also will into financial instrument. In such a case, so what's your own sort of thinking? How basically banks actually would be tackling this?
No, it is a very difficult situation, and aviation sector in India has always been a tough sector. There is a long list of the companies which have gone down under. They all operate in a very difficult environment. And once an airline is grounded, it is extremely difficult to bring it back into the air. Most of the aircrafts are on lease, and they have agreements, and they will take possession of all these aircrafts. And the liability, which I read in the newspaper like you, it's fairly large. So there is to be a very sort of a large scale write down by the creditors, and bankers will also have to take a hit, and the debt will have to be written off by the operational creditors as well as by the bankers. Guaranteed portion anyway, like the government will pay, under not government but the corporation will pay, and so the when will they pay? That is also like it is a time consuming process, but I will be pleasantly surprised if the Go Air is again back in the air.
Absolutely, we have seen in the past again. Once you ground,
Yeah.
then there is no coming back.
So much effort at that time we made that Jet Airways doesn't get grounded, and some solution is worked out, but it did not materialize. And then you see, after the airline has been grounded, it is almost now more than this is nearly 3 years, and despite the resolution plan having been submitted, but there's no progress because your slots they all are taken away. They will be allotted to other airlines. The aircrafts are all on lease, so lessors will take away their plane. So in airline, virtually there's nothing. All the advanced ticket booking by the customers, that money has to be paid back to the customer. Then your ITA, that license goes. So I think I have a very serious reservation that the Go Air can fly.
Right, sir. And I actually, it would be interesting to hear from you, from your last experience. In such a case, when a resolution talks start happening between the banks, it could be banks, it could be NBFCs, but largely financial creditors. Um, is there normally a sort of large disagreement between the creditors? Like, what happens? Suppose everybody has to get around to really sort of give room for them to come back. There must be a lot of disagreements.
So, by nature, everybody is selfish. Let us understand. So, whether it is institutions or individuals, so everybody tries to protect their interest, and nobody looks at the larger interest. This is my experience, not in one case, but in several cases, and building up a consensus is extremely difficult because every person, whoever is involved in the process, is looking at protecting the interest of the organization for which he is working. So it is easier to say that let us work for the larger interest of the company, larger interest of the economy. But when it comes to the actual decision making, it is all very selfish, and you can't build a consensus. Extremely difficult.
And that could also be a sort of reason where, since the things would not get solved, any new suitor would actually take a long time till the time there is not a clean slate given to them.
Yeah, yeah, yeah.
Right, and in this case, I was assuming usually all the lessors who actually would have given aircrafts, they don't actually give till the time there is a suitable bank guarantee or letter of credit is in place. So they will very comfortably come and cash it if there is any due. Same with the vendors, like companies would be giving fuel, like Indian Oil Corporation or any other company. They would be having a sort of LC as a working capital LC given by the banks, but LC given to these vendors. They would be encashing their guarantees, like IOC recently encashed it. So largely, it will boil down to sort of some small vendors and then also a part of banks. Will that be a sort of fair assumption?
No, no, no. The entire lease rate is not covered. That would be maybe 1 month, 2 month payment. There
Yes.
may be outstanding to the creditors because if you look at it, the bank exposure, which is about say 3,500 crore, but whereas the overall creditors are 11,000 crore. So even if there is a bank guarantee for any payment or any letter of credit, that is all part of that 3,500 crore. So
Yes.
rest of the amount is still uncovered by the bank guarantee or anything. Look, like what happens that the lessors also they don't pull the plug immediately that if there is a default of a few days. They also wait and they'll also want that the airline should keep on running because it's a big loss to them when the plane is grounded. Then to redeploy it and negotiate with other line. So this is like it's not that you pull the plug immediately. So there would be outstanding creditors for various items, including maintenance, lease rentals. So and bank did not have ever overdue till March, so they were up to date, and that's why I think banks have been taken by surprise also in this case. This is all whatever I have gathered from the newspaper. So this decision was
Yeah.
not something which seems to have been taken in consultation with the financial creditors. And we have to see because at least in case of Jet Airways, it was the financial creditors who took the company to bankruptcy. In this case, the promoters have declared there are they can do it. It means there is no bar in under IBC. But the question is that now, by the time any resolution or settlement happens, lot of problem crops up. Aviation sector in this sense is much more difficult than a steel plant. There were like a lot of large accounts like SR Steel, Bhushan Power Steel, Bhushan Steel, but they all were running.
Yeah, they were running. There was a plant.
Because
Somebody can come
they were
and fire
running
the
at low
furnace.
capacity, but they were running, and the
Yeah.
administrator was there. So at least the banks could realize in SR Steel almost more than 100%, and in other cases also a fairly good percentage was recovered. But in case of aviation, it's a gone case. There's nothing because airlines knows nothing. They don't own anything. Everything is either on rental, lease, or this. Thing. So And there are actually no credit card receivables also. This we learned from the experience of Jet Airways. The credit card receivables, the banks felt it was learning for the banks that it is a receivable, but it is an advance payment by the customer. They have a first right when the flights get cancelled. So banks
Right,
are absolutely unsecured. In this case, I don't know what security they are holding. There could be personal covenants. There could be some other security. But if anybody who is lending against a bank, lending against any receivables, I think they are mistaken. There are no receivables.
right, right. In that case, usually what would be the sort of expected practice now? Should we be expecting that in the June quarter, most of the banks, as per their own assessment, they will be actually putting down provisions against these exposures?
But there are not many banks. You've seen it is Central Bank and Bank of
Yeah,
Baroda.
Bank of Baroda, Axis Bank, IDBI. Yeah,
So they should make some. They will be making. I am presuming. I can't speak on behalf of any bank, but it would be advisable that they put some prudential provision, if not already done, and then whatever is the statutory requirement, RBI. It is a rule-based provision in India, so they are required to provide only after 90 days delinquency, and if it is a SMA1, SMA2, they will have to make some provision. So, but like prudence, if you want to make a prudent provision, as I said, that I am not speaking on behalf of any bank or anything, they will take their own call. But in a scenario like this, the amount which is not covered by the government guarantee, prudence required that you make some good provision. Whether you want to make it either rule based by RBI or you want to make more than what is required by RBI, that is a choice left to the bank to hold and plan.
right. In this case, largely, I think people are going to watch out Bank of Baroda and Central Bank of India. They basically have the material exposure, and rest of the banks have very small exposure. Moving on from the aviation, let's also talk about. Firstly, I would like to take your view around what's happening from the perspective of bond market. As you know, whether it's treasury or bonds being held for available or sale, or again basically for maturity, they form a good part of treasury strategy, and also sometimes treasury gains also for the banks. We have completed a full cycle, rate hike cycle, rapid interest rate hikes. We saw sort of bonds underperforming for some time, and now with this interest rate pause, which was slightly a mild surprise for the markets, but still a pause, we have started seeing a sort of almost a conclusion being made by the bond market, where whether it's 30-year bond, 10-year bond, shorter bond, all the bonds are rallying now. As per you, what actually now it implies for FY24, uh, both for one is basically the treasury portfolio or the bonds, and second basically for the banks from the perspective of the way actually spreads are going to work.
Yeah. So, what I think you would have also observed, and what I have observed, that the bond market and repo rates. So, there is no direct relationship. The bond market always has behaved differently than the RBI action on the repo rate. The bond market, the yields went up. RBI responded with a lag in increasing the repo rate. Here, RBI, like whatever the last monetary policy, so people are believing that the interest rate now will either be at the same level or come down. So they're ruling out the further increase in the rate. But even if that happens in repo rate, as I said, that RBI action and bond market action has at times been at variance. So what bond market is indicating that they are convinced that inflation is under control, and RBI hereafter may not raise the interest rate. For banks, every bank, their duration of portfolio is different. So every bank gets impacted differently. And they would have made provisions, so there will be scope for some treasury gains. And if RBI doesn't bring down the repo rate, then they will gain on bond market, on their bond portfolio, and they will continue to gain on their loan portfolio, because the almost 40 to 50% book is now linked to repo rate. what they call external benchmark lending. So I think in 24, I think this is going to again a good period for the banks. 23 was a fantastic period for all the banks. Higher interest rate has helped the banks accepting the loss on the bond portfolio. And there was a credit growth of 16-17%. So
Yes.
the bank never did so good, and the provisioning for bad loans because everything was provided over last 4 5 years. So with the very uh, under control, let me put it this way, under control credit costs, higher interest rate earnings on the loan, both on account of the increase in interest rate as well as the credit growth. And there's a time lag. Whatever deposit rates have been increased, so in this year that impact will come now slowly. So, but as I said, each bank gets impacted differently. What is their CASA ratio? What is their duration of bond portfolio? What are their pension liabilities? Because bond market, when like the yields have gone down, so they are provisioning for pension and terminal benefits that goes up. So there is like no uniform thumb rule for this thing. Every bank's balance sheet has a different composition, and they get impacted differently. But on the whole, 24 also must prove to be a good year for the bank.
So, sir, a small follow-up. In such a scenario, when the interest rate cycle gets completed, as per your experience, large experience, usually the margins they actually remain the same, or there is very small, not big, but very small. There is a bit of downward adjustment which happens.
No, as I said that asset side composition now because the 40 to 45% portfolio is repo linked rate. So unless RBI brings down the rate, that will not get it.
Okay.
Their earnings would get impacted only when RBI brings down the repo rate. And what
So,
will also happen, there will again be a time lag. Once the repo rate comes down, so bank will reduce the deposit rate also. But
right,
that impact will be slower. So there is like in the time of when the interest rate goes up, most of the banks, even globally, if you see the results of the global bank, they are making in huge profit because the interest rates have gone up on this. Look, if the interest rates come down, there will be an impact on their profit.
okay. The point of impact is actually from when the RBI starts cutting interest rates.
Yes.
Um, with that thought, sir, what has been your assessment over the strength of the credit market? As you just highlighted, 16-17% credit growth. The number has been very stable across every fortnight. We have been studying the data. The numbers are strong, and if you actually correlate this number to whether it's GST numbers, toll numbers, it's across the economy. The numbers are very, very strong. What's your overall assessment from a perspective of personal finance or housing finance or corporate finance? How it is looking to you as you move into FY24?
Well, some of the growth is coming on account of inflation also. When we talk about the credit growth and the nominal numbers what you are quoting. So some impact even in GST collection, in credit growth. So that is the impact of inflation is also there. So if inflation comes down, so obviously I think the credit growth will also come down. But overall, I think the investment is happening in the economy. Is still largely led by the government. But whatever investment has happened in last 2 3 years, there is also a positive lag effect. And that way, even the housing market, you see, even if the interest rates have gone up, the prices have gone up by 25 to 30%. So average ticket size for housing loans is also going up. So right now, I think we are in a good phase of economic growth and supported by credit growth. The only dampeners could be the international geopolitical situation, which remains very, very volatile and uncertain. But otherwise, the fundamentals of Indian economy, they continue to remain quite strong. And all the effort by the government to push capex, I think that is giving a lot of confidence to people in Indian economy.
Since I have you sir with me, I'm tempted to ask you one question here. We saw the recent US Fed policy, 25 basis point rate hike. They are now above 5%. The difference is now hardly 1.25% about. We saw ECB, they maintained, they're under 4%. They maintained the interest rates, no change. In Asia, there has been some interest rate hikes. For us now, with a very small interest rate gap between RBI or US Fed, uh, what's your own expectation right now in the next policy? Because when I look at the inflation numbers, edible oil prices have fallen by almost 20-25% versus last year. With the palm oil, soybean oil, most of the edible oil prices have fallen considerably. Crude, that prices has moderated down. So overall, what's your own expectation now on the interest rates?
So one is that food inflation has always been a major component of inflation in India. And as you rightly pointed that right now the food prices and edible oil prices, everything is showing a downward trend. So one factor which will play a critical role is that how the monsoons perform and what happens to the food grain production. So that always has an impact on the prices and as well as the overall spending power in the rural. So that is one factor which we will have to, one risk factor in fact, that cannot be ignored. Uh, the price stability on energy front, so that helps in the sense that at a certain level of crude oil prices between 80 to $85, economy has adjusted, consumers have adjusted, and now hopefully uh, that price level may not go up. So that way, like the overall scenario seems to be, and that is what the RBI assessment was, that we can expect some relief as far as inflation front is concerned. And if there's a relief on inflation front, then it gives sufficient elbow room to Reserve Bank of India to either keep the interest rate unchanged for some time or eventually start reducing the interest rate. So maybe like two, as I said, two critical factors. One is what happens on geopolitical front where there are a lot of tensions. The other is how the monsoon uh, performs this year in India. These two are, in my view, uncertain factors about which you can't predict what will happen.
Fair enough. Fair enough. So, keeping the unknown geopolitical equation, as we just highlighted, domestic equation seems to be supporting as a sort of plateauing of the interest rates. Let's wait again how the sort of geopolitical equation pans out. But you are with us, and I would slightly actually attempt to end the conversation with your views on the technological changes which are happening in the banking sector. You actually revolutionized for SBI through Yono app. You have also actually been on the side of FinTech Association of the Bharat Pay. You have seen the payment banks. Right now, sir, how's the FinTech entirely sort of shaping up and affecting or supporting the sort of financial sector? Give us your thoughts on it for our viewers to really how actually they should be expecting from the financial sector.
Yeah, so financial sector, like I'm not talking about the main banks and NBFCs which are doing well. The technology banks will continue to invest, fintechs will continue to innovate. The only issue about the startups and fintechs, which has come out very clearly, is that while innovation and growth all are welcome, but you cannot ignore that it has to be a profitable business and it has to be a well governed business. So these two messages are very clear, and the earlier parameters on which you got evaluated, like your gross, what they were, GMV, TPV. So all these are out. Now the investors ask, "Hey, when will you make profit? How much will be your profit? And what are your governance systems?" So it is not necessarily a bad thing that there is a some realistic approach to the whole thing. But There is enough capital, and I am told that particularly like seed capital, angel capital, first round capital, that all is available. It is the final round, round D, where you find it difficult to raise capital. But round A, round B, capital is available, which is again a good thing that if somebody has an idea, somebody has an innovative idea, there's a funding support available. But when the company or any fintech or anybody wants to grow and try to achieve a scale, so they will have to be very mindful of the fact that there is not unlimited amount of cash which is available for burning, and the tolerance towards poor governance, that is now some sort of a zero governance. So you become like any other legacy corporation as far as the governance standards are concerned. So this is a major shift which has happened in the last 12 to 18 months.
So, on that note, Rajnish sir, we would like to thank you for coming on our show and giving us all the insights about fourth quarter, financial sector, interest rates, aviation. We talked about a lot. Thank you for coming on our show.
Thank you.
And with that, dear viewers, hope it was a sort of conversation which you enjoyed it. On the banking sector, fourth quarter earnings have been really robust, very strong. Aviation is something which will keep following up very closely, as we heard from Rajnish sir, that the exposures are relatively sort of restricted to few banks, only for one or two banks. It's slightly material, but then also again, we'll keep hearing from them how they are going to come about on their provisioning. But overall, for the banking sector, it continues to be a very, very strong sort of performance so far. And with that, we come to the end of this conversation. Thank you for watching us.
Thank you.
Subscribe to our YouTube channel and click on the bell icon to never miss an update from Nirmal Bang.